Hey, Rebel Bankers, this is your host, Chris Naugle, and welcome to the show. I'm here with Coach Adam Kipnes, and we're going to go into some really unique stuff, but we just had a little discussion, a little bit about his journey, and I can't wait for you to hear it. So we're going to get started in just a moment. We're going to talk about his journey. We're going to talk about the obstacles he went through in his journey to where he's at today and some of his deals, plus a whole lot more. But let's talk a little bit about you and you getting started on your journey to becoming a Rebel Banker. One of the first things I always say you should do is get some basic knowledge on exactly what that means to become a Rebel Banker. And the easiest place to do that is grab a copy of my book, The Private Money Guide. Check that out, or check us out online at chrisnaugle.com for all the upcoming podcasts, the upcoming events, and all the other awesome stuff we're doing. So let's jump right into this, because I think this story that Adam's going to share is going to blow you away. So welcome to the show, Adam. And let's hear a little bit about what your investing business looks like today. And then we're going to take a trip back in time and talk a little bit about that journey.
Thanks, Chris. I appreciate you having me here. It was great seeing you a couple of weeks ago and reconnecting and having the opportunity to be on the show.
Absolutely.
From an investing standpoint, I own a couple rental properties. They're still more or less the death of me every day as I get a phone call of something going wrong. And we can get into that.
Are those phone calls on Sundays and holidays only?
Well, currently I'm dealing with the Phoenix Police Department because of a drive-by shooting on the property, which is awesome. So tomorrow when I get back to Phoenix, I'm in Salt Lake, and I don't know if anyone can see me on video. It's a little dark. I'm at a friend's cabin. It's very cabiny in the woods. And so I tried to make do in the best place that I could be. But I've got to meet the police there tomorrow when I get back to Phoenix to figure out. It's an old lady that lets randoms hang out on the property. And evidently there was a drive-by, and now I got to go clean up that mess. So I've got a couple rental properties. I have my own cabin, my own real estate. But most of what I'm doing right now is more on the lending side and the really passive side of real estate. So which allows me to do my coaching business and allows me to do everything else I do without the day-to-day of dealing with properties.
Coach Adam, tell me and the audience a little bit more about what does that business look like today? I mean, you're more on the lending side. We already kind of heard a little bit about what your rental business looks like, and that's pretty common. We have some of the similar issues, not so much drive-bys, but the calls on weekends. But what is the business, like the lending business and your coaching business? Go a little deeper into that. Tell everybody about that.
Yeah, definitely. So on the lending side, because I was doing real estate and I did a number of deals that we can talk about before, I met a number of people in the Phoenix area who were finding great deals and just needed the money to do it, right? We all deal with that in real estate. And I had sort of my powder keg of cash that I was going to use in order to flip houses and be a full-time real estate investor. And I realized that I was just not in love with properties. I was not in love with getting them. I was not in love with doing them. And this allowed me to make money in a non-traditional way. I work on the coaching side, most of my clients are in financial services. So my day-to-day has been tied to the stock market, to Wall Street. And real estate allowed me a way to diversify what I was doing and not have all of my eggs in the one basket, where if the market went down, my income went down and my investments went down. So real estate allowed me to do that. And so I met folks who were looking for capital. I had capital, and I can get a rate of return. I get a flat 15% on the money I lend. I didn't want to be tied to them doing a bad deal and not having enough upside in order for me to get a big payout. So I just lend straight 15%. And I found several folks that I trust and have done deals, and they constantly have that money in motion. So I get my 15% and they can continue to find properties. They run them by me to make sure that I want my money tied to it. And it takes me, 15 minutes a week, if that, to talk through what the deal is, where the progress is, and make sure when they sell their property and money becomes free again, that I have another place to go to. And most of it is through one firm that normally has 4 or 5 houses in constant motion. So I have very little to do. I've just set it up as a really passive business. On the coaching side, like I said, I've worked with financial advisors my whole career, and that's led me to not only financial advisors, but other knowledge-based professionals. I work with doctors, lawyers, realtors, other real estate investors, people that have a knowledge, and that has become their business. I become the business mind and the business side for them.
That's awesome. So you're now the bank, which, we always talk about this, the evolution in real estate. And I know when I first started, I remember, I got started in flipping, and then I evolved into some wholesale deals, then evolved into a rental portfolio. And today we do just about everything. But every step of that entire journey, when I was going through that, I remember looking at the people we were borrowing money from, people just like yourself, Coach Adam, that were the bank. And I remember saying, that's the ultimate. 15 minutes per week, 15% return. I mean, and you don't have to go out there. You don't have to get the calls on weekends, the occasional drive-by, but it's just the ultimate. So how many deals did it take for you to do before you actually ended up as the bank? So let's take a trip back in history, and let's go back to your humble beginnings of kind of how you started in real estate, what those first few deals look like. I mean, did you borrow money for them? Did you have your own funds? Let's talk a little bit about that, and then how that progression happened to get you to be the bank.
Yeah. So it's interesting that there's always the deal you didn't make, right? Sometimes that's a good thing, and sometimes that's a bad thing. And I look back, I was going to college in Atlanta, and renting my first apartment, right? Move out of the dorms, get your first apartment. And my mom said, why don't we buy a condo and you can rent it to your friends, and then we don't have to have the apartment, and you can make money, and then we'll sell it when you graduate. And we had not been in real estate as a family. My grandfather had done some hard money loans, but I didn't know what that was when I was 19 years old. We didn't call them back then. And I was like, Mom, I don't know. That's a lot of risk. My grandfather, thankfully, had left me some money for college. Not a ton, but enough to get me through college, and could have made a down payment on a rental property that I could have lived in college. And I was like, I don't want to risk my future on real estate. I don't know anything. And so I didn't do it. And we did the apartment route. And looking back, I should have bought a fourplex, lived in one, had people rent the other. I probably would not be working in any way today had I done that 25 years ago. So that's the deal I didn't make. That when fast forward 20 years, I was working in corporate America, got laid off in 2008. I was in the financial services, as I said, and there were just no jobs. So my wife was on Facebook, and Facebook was kind of in its infancy back then. And she saw an advertisement for this one day and learn how to be a real estate investor thing. I'm sure most of your listeners, as you and I, probably went to one of those.
Same here.
So I went, and we were there for, I don't know, maybe 25 minutes of a 2.5-hour presentation. And we saw where this was going. We knew that there was going to be a sale at the end, and they were talking about this 3-day event. And so I raised my hand in this group of, 100 people or so that were there. And I was like, can we sign up for the 3-day event now, or do we have to wait for the end? And he's like, oh, no, you can sign up now. So I walked to the back, and it was, I don't know, $395 or something for the 3-day event. And so I signed up, and I asked them, I said, do I have to be here for any more of this? And they're like, nope, we'll see you in 2 weeks at the 3-day event. And so my wife and I left. We go to the 3-day event, and we're learning about real estate. Things that I knew sort of intuitively from my business background were sort of crystallizing around real estate. I was like, all right, this makes a ton of sense. Let's do this. And I was kind of, I don't know if arrogant's the word, but I was like, hey, if I'm going to invest in a real estate course, if I'm going to invest $10,000, I'm going to make $10,000. If I invest $30,000, I might as well go big and invest in the bigger course and get more knowledge and learn all these things. My wife has her MBA and a bunch of other things, and I didn't go and ever get a graduate degree. So this was essentially my graduate degree was going to be in real estate. And I started taking courses, and that led me to the real estate knowledge that I have today. And I took classes on wholesaling and flipping and lease options and rent to owns and creative financing. And I'm sure there are some others that I took in there. And I took all these classes, and I said, I am not going to be a wholesaler. That sounds like a ton of work. I just want to buy a house. I want to fix it up and make it pretty. I want to sell it. And I want to do that again. And I want to do that again. And then I want to buy an apartment building. So I had the whole plan mapped out. It was on, whiteboards on my wall and the whole deal. And so I started, but now I had to find a property. So I started meeting wholesalers and I started sending out letters and doing all of the things that you do in real estate. And for a few months, it was just, I was going through the motions, but I didn't know what I wanted to do, and deals weren't coming, and I didn't know how to analyze them, or if I did, I was scared that I did the math wrong, so I didn't pull the trigger. And then a deal comes up literally right around the corner from my house. There's where I live, there's a mountain. On one side of the mountain is relatively crappy properties. On my side of the mountain is nicer properties, which is why I live there. But this was right on the other side of the mountain. It was a 3-bedroom, 2-bath, 2-story house. Really cute place built in the 40s. I got it for, I think, $35,000. And there were houses
Adam,
selling for $8,000.
What market? I'm sorry, I didn't mean to cut you off, but what market was this in? Was this Arizona?
Phoenix. This is Phoenix.
So that's pretty cheap for Phoenix. I just wanted to make sure I pointed that out to everybody.
Yes, it was super cheap for Phoenix, and there were houses in the neighborhood that had sold within the last 90 days for 85 or 90. So I was like, all right, I've got some spread there. There's not a whole lot of risk to this property. And Phoenix, this was early 2010. So March of 2010, the market from 2007 to 2010 had literally gone straight down. There was no little hiccups. It went straight down. And then it started to rise a little bit. And I said, this is a great time to buy because it seems we've hit the bottom. Things have leveled off and things are starting to come up again. And so I bought this property and I dove right into it. And I used my own money for this because I was planning on flipping it within 60 days. And then I'd have the cash, so I didn't use a lender for it. Well, then another property pops up, a triplex. And that triplex was also $35,000. And it was easily worth $70,000, $80,000, $90,000 in the area it was, especially with the income and the cap rate it was going to produce. And so I bought that as well. So now I've used all my money. And I'm working on the single family house, and I'm getting that going. But now I need money in order to do the rehab on this $37,000 triplex that I bought. And I found a hard money lender because I paid cash. He essentially just allowed me to borrow my own cash back against an assumed value of the property going forward. And that was my first introduction to lending. And so I got the first house done, put it on the market below market value in order to sell fast so I could get money. The day we put the stake in the ground with the sign, 4 foreclosures popped up on the same street at under $40,000 per. And the house sat and it was beautiful, and people would come by, no offers. It then became a rental property, and it became a rental property with all my cash tied up in it. And so I moved on to the triplex, and I fixed up the triplex, and it was a nightmare. We put in the bathroom, we got everything done, and then it was older house, a pipe broke before it. We had to tear out the bathroom, put the same bathroom back in again. It cost me 3 times as much to redo as I thought I was going to. I used up my cash as well as the lender's cash, but then the property sold to accept the VA said because the lender or because the buyer hadn't done X, Y, and Z, it fell out of escrow. But I had to put in another $1,500 worth of ticky-tack stuff that the VA wanted me to do in order for them to lend on it, and then they didn't. And then it sold again, and this time to an FHA buyer. And in the end, a month later, another $1,000 in ticky-tack stuff didn't qualify. Cash buyer comes in, wants to buy it at a discount from what I wanted, but I was like, I'll break even if I lose $1,000 or $2. I'll get my money out and move on. I've learned a lot of lessons. They pull out. So 3 people pulled out in a 4-month period. Meanwhile, I'm making payments to my lender. I'm fixing ticky-tack stuff. It's not in a great area. Not terrible, but not great. And so I had to be worried about having this empty, redone property with people that could break a window and want to crash in there at night or steal my copper or do whatever people do in bad areas of town. So I turned it into a rental. Fast forward 12 years, that's where the drive-by was. I still own it today. It does cash flow nicely, but it happens to be directly across the street from Grand Canyon University, which is a major university. They're buying all of the real estate north of this major road. I'm 2 blocks south. Somewhere in the next few years, they're going to have to go south because they're running out of land. And so now I'm just holding on for dear life and drive-bys, waiting for them to buy the property from me. So I think they will. So that's sort of that was my beginnings of real estate, was these 2 properties that went super poorly. And I learned that I didn't like finishing. I was great for the first 90%, but the finishing touches and then getting it sold, I hated that portion of it. So I realized that flipping was not going to be in my future.
It's so funny. Your story, Coach Adam, is so much like mine. It's actually all the times we've spoken at the different events where we've seen each other, I'm surprised this never came up. I mean, right back, the financial advisor or working in financial services, obviously that's been my background, 16 years. The same exact stories with the real estate and that deal that you should have bought that you didn't buy. So I'm not going to get into that, but it was just, that was great. I love it. But let's talk a little bit about kind of the cycles of the market, just because you do come from financial services and I don't ever have the opportunity to kind of talk this way in the podcast. And I think it's so vital that people understand this. So let's just talk about those first couple deals. That one that you should have bought, that 4-unit, how much could you have bought that for back then? And what do you think that would have been worth today? And then the flip, what you bought that for was in the 30s. What would that be worth today? And same thing, what is your triplex worth today?
Yeah. So the property that we were looking at in Atlanta back in 1991, give or take, we could have bought a 4-plex, redone, no work that needed to be done, for about $85,000. And it was near a university, Emory University, which has 800 new students coming in every year in the freshman class. And that property's probably worth 400, 450 today, somewhat 28 years later. And it would have cash flowed all the way along. Other than the maintenance, it never probably would have been empty. The summers would be a challenge, but you figure that math out when you rent it, when you're renting sort of on a 9-month college cycle, but some people stay for the summers. It would have been rented the entire time. That probably could have been a retirement plan in and of itself, from the equity that it gained and the cash flow that it would have given over the last 25 years. And ideally, had I done it, looking back in a perfect world, I probably would have owned 5 or 6 of them and just become, a bit of a college slumlord in the rich kid college private school area, and always had properties. The single family house I still own today. The triplex I still own today. The single family house I put in $58,000 total purchase price plus rehab. It's needed very little, knock on wood. In the last, I bought that in 2010, so the last going on 9 years. It's worth today about 150. Okay. It's probably topped out at 150. If it gets much more than that, it's time to sell everything in Phoenix, because that's a bad sign. At the height of the market in 2006, this property was worth about 180. And I don't think we're getting back there, because that's when lending was free money for everybody. So if we don't, so 150, 160, it's getting a little toppy. The triplex is probably worth, even with the drive-by, I got a cash offer of 180 the other day from another investor. So it's probably worth 220 to 240 rented and in good condition. So from an investment standpoint, I bought a little bit early. As I said, I bought right as it was going up, and then we took another step down before the market recovered. I bought a little bit early, but over the course of time, they've been great properties because I hit the market right. And I knew Phoenix is a boom or bust town. You're in Buffalo, it's pretty steady Eddie over the course of time, right? You can buy a $60,000 house in 20 years. It might still be worth $60,000, but you get great rents. In Phoenix, you have to buy low, you sell high, but the rents are low, so you don't make a ton on cash flow. And so you just have to know your market and really understand, not only is it cyclical, and what works in your market.
All right, Coach Adam. So the reason I wanted to do that little exercise is for a very specific reason. And
Yeah.
because this is the Real Estate Money School, we talk about money. This is an important takeaway for the audience. You just described the Arizona market. The Buffalo market, is normally been a very transient market, very flat line. We've been going up a lot, but let's just focus on just the ups and the downs and kind of how opportunity can present itself. So you bought these in the 30s. They're now worth the mid 100s. Most people watching this would be like, holy cow, that's amazing. But the best part of what we can tell them now is because of our backgrounds in financial services, the one thing we both share and understand are market cycles. Very rhythmic, patterned, predictable market patterns that will happen consistently over and over and over again. And right now, like you're saying, if it got back to that 170, 180 level, it's time to sell.
Yep.
Well, we're pretty close. We're 10 years, a little over 10 years from the 2008 crash. And in the 2008, 9, 10 crash, you were buying. I was buying. Many of the other investors we talked to were buying. And that was an incredible opportunity, but it was an opportunity in a time when people were losing everything, when everything was falling apart, and it was the doomsday, claims. It was everything's going to go to zero. But that's when opportunity strikes. And if we're now reaching those highs, if we're not already at those highs, because we may never see that free money day again. So we're at these highs, the next place that I think it's going to go is back down. And I'd love to talk just for a moment, because this is unique, and this is that opportunity coming that we're all going to see again. And if people can learn a few things from this podcast, and especially this session of this podcast about this market cycle and the opportunity that is about to present itself again, and then they can understand how to get themselves in that position of being the bank, or understanding how to be the bank so they can then meet people like yourself, Coach Adam, who have the money, and then just be the bank for you or other people to keep that money in motion. What are your thoughts on what's coming and how to prepare for what's coming?
It's really interesting to think about the cycles, because we can't be prognosticators of what's going to happen. This and what the last 2 years has taught us is that in Trump land, lots of things are different than they were prior, right?
Amen to that.
And that's not really a political statement. That's just a difference in the world that we've never seen before. So we don't know what's going to happen. We don't know what's going to happen with interest rates, although they are still rising, although that may be slowing for a little bit. I don't want to get too technical, but the yield curve has inverted. That means short-term rates are higher than long-term rates, which is never a good thing for the market. And it leads us to believe that interest rates on the long end may stay low or not rise like we thought they would. We may not see 7-8% interest rates like they were when I bought my first house in 1998. But we may have a few more good years left in us, or something could happen economically with trade with China, with the jobs market, where it could turn much faster. And one of the things that you have to think about is not only the cycle of your particular city, but the cycles of other places that you may know or want to know. And I'll get to that in a second, but also the different opportunities in the real estate market, whether it's flipping, whether it's buy and hold, whether it's lending. Because one thing I learned, and Chris, I told you before we jumped on the recording, I don't like real estate. I border on hate real estate. And part of that is because of my own lack of process when I started. Like I said, I was not going to be a wholesaler. That sounded like work to me. I didn't want to search for properties and then have to search for another property and another. It just sounded like a constant grind. And I said, I'm not doing that. I'm going to flip houses and then I'm going to have some rentals. But what I learned in doing that, because I did end up wholesaling a number of properties, is the property tells you what to do with it and the circumstances tell you what to do with it. You don't tell the property or circumstances what to do. And what I mean by that is my triplex and the single family house that I have, I could have sold them along the way. I like them as rentals. I like the cash flow, and I like having the equity sitting there that I can utilize in other ways. But They were not in great long-term hold areas for a privileged kid who works full-time and doesn't spend his time focused on real estate. It needed to be owned by somebody that wants to deal with lesser properties. For me, that property should have told me, this is a great wholesale property for you, or this is a great property to partner with or to lease option rather than hold outright and rent. And if you look at every property and say, all right, property, tell me what I should do with this, it may be a better wholesale than a flip. It may be a better property to lend money on than it is to own yourself. So don't go into a property and say, I'm going to flip this property. Even if there's great spreads, it still might not be the best use of that money, that time, that property. So I learned that later. Had I learned that in the beginning, I might be doing more real estate today than I am doing, because I tried to tell the property what I wanted to do, and now I'm holding properties that I wouldn't have. So that's one part of it, and that can be in any cycle. And if you know the cycle, so right now in Phoenix, if you know that we're getting to a top, you could buy a property and you could flip it and probably make some money if you buy it right. But if you're looking at the cycle and you say, all right, this may take me 3 months, 6 months. If it drags on, what's it going to look like? That property may say, hey, why don't you find somebody else who's more experienced or has deeper pockets or who wants it to be a rental? And rather than flipping it yourself, make it nice enough to be a rental and sell it to somebody at a smaller profit that they can hold for a long time, that you don't get top dollar, but you don't get stuck like so many people did in 2007, 2008, where they had 3 properties going and all of a sudden they couldn't sell them or they couldn't borrow, right? So that's the cycle of the property itself. The cycle of the market is, if your market is toppy, there is a market that is not. Buffalo could be one. If you look at other places in Arizona, there are people moving to different cities in Arizona where Phoenix and where I live is really expensive. There are smaller areas that aren't. If you look in the Midwest, I know a lot of people doing deals in Illinois, Illinois, Iowa, Indiana, where they're buying longer term holds, and they say, you know what, I can buy, rather than a $300,000 flip property in Phoenix, I can buy 3 $60,000 row houses in Indianapolis that probably aren't going to go down, probably aren't going to go up, but I can get constant cash flow from them and then sell those when it's an opportunity to buy in a growing market like a Phoenix or like Miami or Southern California. Hopefully that made some sense.
It makes a lot of sense, and that's very smart. It's kind of what I was looking, I was looking for your take on how to play it, and that was great because you basically laid out a very simplistic plan on how to play real estate into any market. And you're on the banking side and the coaching side now, and a lot of the people watching this may be just beginning. So I think that was some great advice for them. But let's just go back to 2 additional things on your story now that we talked a little bit about the market cycles and how to play real estate into that.
Yeah.
When you were in your journey, you said some very key things that just really resonated with me. And they really had to do with your internal and your external obstacles that you faced. And, right back to when you got that postcard and you went to that 1-day preview that led to a 3-day, and you were just like halfway through, can I just buy that? I did the exact same thing. But after you got into that and you started going through the training, can you just talk just about maybe one of your internal obstacles that you faced on, right after that education, and one of your external obstacles? Maybe it was fear, maybe it was, family, maybe it was just other people in your lives. It was saying, why are you doing this? Because you do come from a financial services background. Just real quick, because I know when I'm looking at someone's journey, those are the things I want to hone in on. What were the things that really slowed you down or that stood in your way in that journey?
Yeah, so I would say internally, it was assumptive arrogance, I guess is the way I would put it. I assumed that I knew what I wanted to do. I assumed I knew what I would be good at. And I was arrogant enough to think that I was right. And so rather than taking my real estate education as education, I took it as tactics. So when I learned about flipping houses, I learned the tactic of finding the house, buying it right, making your budget for the house, and going ahead and flipping the property. I didn't take it as education to understand flipping and what it all entailed. Same for wholesaling and same for lease options. I looked at it as that's a tactic I can use, rather that is knowledge I can internalize. So I was really just overly, I guess, arrogant in my own skills and my own thought process that I knew better. So these tactics would help rather than I need to immerse myself in the education of real estate as a whole. I wasn't looking at cycles back then. I wasn't looking at a property from 5 different angles and say, what if I sold it? What if I lease optioned it? What if I wholesaled it? I didn't look at all of those and figure out where the best ROI was or where the best path for me, as I was still, in coaching folks. It's a 30 to 60 hour week job, depending on my schedule and depending on my client schedules. I didn't look at any of that. I looked at the property and said, I'm going to flip this. So I think that was the internal struggle that frankly I failed at and didn't do well, and led me to lose some money here and there, and led me to miss opportunities, and led me to be stuck with properties for a longer period of time that I wanted to, because I didn't become a student of the real estate game. I just got high-level tactics that I could implement. So that was the internal side. The external side, thankfully, I've got some, great family, great friends. Everyone, they didn't see me as crazy for doing it. Many people were jealous that I was doing it, that I took this bold step, and they're like, wow, real estate? You can invest in real estate, right? A lot of people looked at me as a knowledge guy. This, you must have money. You must be really successful. You must be all of these things because I was doing this, versus, wow, you're crazy. You're going to lose all your money. How can you take this risk? So that was really a nice thing to have, and kind of led me to coaching and I'll get there in a second. But I had people that supported me and were envious of what I was doing. I also met a number of people, and people that were already my friends, that were getting into real estate in different ways. Again, there were a lot of people in Phoenix that were flipping pre-2007 and making a ton of money. And I think I was the jealous and envious one of them, because I was like, wow, I can't do that. But now that I was doing it, they were still in the game. And so I knew them, and so I could bounce ideas off them. I could get their contacts, so I didn't have to search for my contractors. I knew people in the business. But I think I had, I guess externally, but internally, I would see these other folks that had been doing it longer, and it made me a little gun shy of doing some things, because I saw the success that these people had and was like, I'm not there. Even though other people saw me as there, I didn't see myself there. And so it took me a while to feel like real estate was a part of me, or that making money and being a viable resource to others was a part of me. And that probably took a good year and a half, even while I was rehabbing these properties and learning more and having rentals, before I saw myself where I could be a resource to others. But as soon as I did, as soon as that switch flipped, where I knew that I didn't want to do real estate day to day, I was done with that. I had a friend approach me for hard money, and I loaned it to him, and it went well, and that led me on the hard money side of it, where I still am today. And once I did that, I said, I know all of these things now. I've got lessons, I've got things to teach. And when people came to me saying, hey, this is amazing, I can't believe you're doing this, I'm so jealous of you, that led me to be able to coach them, transforming what I was doing in my financial services world to others, saying, this is my job, but it's turned me into a coach, and now I can coach other people on my experiences, on what I've learned, and give them what they're looking for, what I didn't know I needed when I first started out.
That's fantastic. I mean, it's an evolution of just so many different layers and so many different things that you've gone through to get to this point. And you're probably just getting started in your own mind. I mean, I know a lot of people I meet, like where I look at them, I'm like, wow, you made it. And then you ask them, and then it's just like, I haven't made it. I'm just getting started. So that's fantastic information. And I know our audience is going to leave this podcast being extremely motivated with some serious golden nuggets and hopefully some ammunition to go out there and get started on their journey or continue on with their journey in a little bit smarter way. But before we started this podcast, we talked a little bit about some things that you've got going on and some offers that you wanted to offer this audience. So if people want to get a hold of you, how do they go about getting a hold of you? And just tell them whatever you'd like to tell them.
Yeah, I appreciate that. And obviously, I'm being a friend of Chris's and supporting his community. I'm here for whatever you all need, even if it's a quick phone call or excuse me, or just some quick advice, or to tell me your own story and see what I think, given what you know about me now, how I can add some value. But definitely connect with me on Instagram at Adam Kipnes. That's Kipnes. You can go to my website, which is coachadamkipnes.com. There's a lot of free resources on business in there, and real estate is a business like any other. Don't forget, the business aspect of real estate is not about the properties. It's about the making of the money side of it. And there's a lot of free resources there. And then I've got two giveaways. One is my book, which is called How to Make More Money in Your Business. And there's easy steps to implement today that don't cost money out of your pocket, so you don't have to spend advertising dollars. They work really well in a real estate business. And you can get that at freebookfromadam.com. And it's 8 steps. It's about a 30-page read, but you can implement them today without spending any money. So I think your listeners will really love that. And one other thing, so I have my own podcast. It's called The Entrepreneur's MBA. I interview entrepreneurs. Chris will be on there in a little bit. And I interview entrepreneurs on their journey about business. And I've had some great folks. Kevin Harrington's been on it. Sharon Lecter's been on it. Christy Brinkley's been on it. And just some really interesting folks. So through that, I've got a sponsor, powertexting.com. They're great folks. And they give away a free trip to one lucky listener from every show that I do. And there's 17 locations. You can go to Bali. You can go to Cancun, Puerto Vallarta, Las Vegas, San Diego, Branson, Missouri. I don't know why that's a choice, but for folks in the Midwest that want to go to the Ozarks and go on the lake, it's a free trip. All you need to do is cover the resort fees, which are usually $150, but it's 4 or 5 night stays at 5-star resorts. If you go to podcasttrip.com and put in your information, I will pick one person that listens to today's podcast over like a 2-week period, and someone will win that free trip and go on a great vacation so you can clear your head and come back and get ready to implement what you learned on the show.
Oh, that's perfect. So not only is that perfect, Coach Adam, sign me up for Bali. I need a coach, or I need a trip out to Bali to do some surfing. So
I think we can make that happen.
That'd be fantastic. So I know everybody here at Money School is extremely excited about everything you just said, and I know our audience will be too. So for all of you just getting started on your journey to becoming a rebel banker, don't forget, getting started always starts with taking the leap. You have to get started and leap into it. Stop talking about it and start doing it, and get started with a copy of the book, The Private Money Guide. Go on, grab Adam's book, and he's giving it away for free. So why wouldn't you take advantage of that? And it's all about how to make money in your business. Like he said, real estate is a business, and a very powerful one that you can tap into. So thank you all for joining us, and make sure you check out the next edition of the Real Estate Money School podcast, where we're going to make a special announcement for an upcoming event that we've got going on that you're all going to want to hear about. So stay tuned, and thanks for joining us for this edition. We'll talk to you soon. And Adam, thank you so much for your time.
Thanks, Chris. Thanks, everyone.